The share market's going to start the final session of the week on the back foot. SPI futures ended the after-hours session with a loss of 24 points, so that's a loss of around 0.4% that contract's suggesting for the ASX 200 when it kicks off later this morning. And that in turn is a reflection of what was a mixed session for US stocks in particular. The broader US market underperforming, with the S&P 500 finishing down by 0.5%. But technology stocks continued to outperform. They had a patchy start, but came home quite strongly, with the Nasdaq finishing up by about 0.5%. The Dow, a more narrow catchment of US stocks, was down by 1.4%. So there are a number of important issues that are orbiting each other at the moment when it comes to US stocks. The backdrop still remains one of rising infection rates and concern about the way that various states are going to manage this issue on an ongoing basis. So that's one factor. But then on the other hand, there is a sector that is anticipating the potential for more lockdowns, and as a result, money continues to move into technology stocks, which are the backbone of the way that commerce is going to be done in the event that things become a little more straightened when it comes to lockdowns. So that's why we had shares like Nvidia, for example, the chip maker, up by around 3%. Advanced Micro Devices was up by about 7%. And then, of course, the engine for all of that is the cloud computing strength of organizations like Amazon. So that stock was up by around 3% last night. Another thing worth watching out for in the local context today could be the underperformance of banks, and that comes at the hands of falling bond yields. So US Treasury yields actually had a decent fall last night, particularly the 10 and 30-year yields. So what that means, longer-term interest rates are coming down. That's a reflection of a couple of things, not least of which is a move into safe havens. But particularly for the operating environment for lenders, it means that you're going to see a contraction in your net interest margin under these circumstances, and that's why the lenders were under pressure. Wells Fargo and Bank of America, for example, each down by around 2%. And back to the issue of the measures that might be taken to contain any further outbreaks of the coronavirus, we saw airlines under pressure as well. So American Airlines shares were down by around 7% last night. And then we saw a build in US oil inventories, which didn't help energy stocks. So Exxon and Chevron all fell by around 4% last night. So gold stocks have been doing quite well in recent times. The yellow metal overnight has backed away a little bit, but still at its highest levels in around 8 years. So that's worth pointing out. Elsewhere, iron ore prices were a little bit firmer in the last day, not by much, but still doing a good job of consolidating above that $100 per tonne mark. So at the moment, trading closer to $107 US per tonne. Now the Aussie dollar is softened up a little bit. The greenback has been under pressure in the last couple of days, but it's firmed up in early Asian trade, so that's made a little bit of a casualty of the Aussie dollar, which is trading around 69.6 US cents. Have a great weekend. Thanks for tuning in.